Good morning, delegates. Welcome to the first webinar held by the Insurance Business Group on the topic, the impact of COVID-19 and the initiatives by the insurance industry. I am Sandhya Divakaran, the Deputy Editor of Premium Magazine. Recently, the number of cases of the novel coronavirus, or more commonly known, the COVID-19 pandemic, crossed 15 million worldwide with more than 600,000 deaths. Losses brought about by the pandemic and the resulting economic volatility, coupled with low oil prices, have impacted every industry. As the voice of the insurance industry, the Insurance Business Group is looking to understand the impact to all sectors and how it correlates to the insurance sector while looking at meaningful initiatives undertaken. For today's discussion, we have speakers who are well known in the banking and insurance industry. We have Shady Shaher Elborno, Head of Macro Strategy at Emirates NBD, Lutfi, Secretary General of the Emirates Insurance Association, Walid H, Vice Chairman of the Insurance Business Group and the Founder and Managing Director of Arab Loss Adjusters, Dr. Abdul Zahra A, Chairman of the IBG and CEO of National General Insurance, Walter Jopp, CEO Middle East at Zurich Insurance Company, and Aftab Hassan, Secretary General of the IBG, CEO of Arya Insurance Brokerage, and Chairman of Risk Exchange DIFC Limited, who will moderate the discussion. While these speakers need no introduction, their profiles are listed as a handout for all the attendees to download and go through. This you will find on your control panel. As a quick reminder, you may send questions through the questions panel on the right side of your control panel. Questions will be addressed anonymously by our moderator at the end of the discussion. Over to you, Mr. Aftab.
Aftab, you're on mute.
Again, we forget that. Am I okay? Yeah. Okay.
Yes.
You can hear that. So again, well, good afternoon, friends and colleagues. I'm very pleased to have the opportunity to serve you as the moderator for today's this virtual conference. I always use because of the webinar due to obvious reason to reach you through the web rather than physically. As you know, COVID-19 pandemic has shattered the entire world and the economies of the world and has influenced almost all sectors and business and individuals apart from insurance. And this pandemic has severely impacted many industries such as travel, transport, energy, manufacturing, retail, hospitality, and the list goes on. Although the impact on the insurance sector, as I see, is still unknown to us, but we feel that it is less severe than other sectors, but it will still be significant and highly disruptive, ranging from employee and business continuity issues and the other client service considerations and so on, like operating profit extra. So as we all know that the world's scientists and global health professionals, together to accelerate the research and development process and to combat this crisis, they are trying to develop vaccine, but still we don't know when it's going to come. Hope is the one thing that sometimes keeps us going. And we hope that sooner or later, the vaccine will come very soon. Today, the world is facing the crisis, a pandemic that has changed life for millions of people. And in times like these, we have to keep ourselves a strong, powerful source of reassurance ourselves from within. And many who are locked at home, others who are working to help and prevent the virus. And also, they all need the reassurance from all of us and hope that we shall overcome this crisis. So as we all know about the important and unique role our industry, which is insurance industry, plays in the daily lives of millions of people, we all want an insurance industry that is sustainable, innovative, and competitive, one that customers can trust so they can have confidence that the everyday services they need are provided in a straightforward way. And this means that a successful market has to be built on delivering the commitment we make to our customers in a fair and transparent way. That's what we are all here to talk about today. As we see that in today's session, we will have the chance to listen to our distinguished speakers representing the sentiment of insurance industry and reinsurance industry during this tough time. And the key aim in this webinar also will be to hear the sentiment from the industry perspective, vis-a-vis offer practical advice to the policy holders at large. And we will kick off this session by a brief presentation by Mr. Shady Shaher Elborno, who is the head of macro strategy research at Emirates NBD, and he will shed some light on the outlook and sentiment of our industry across all sectors affected by coronavirus. So then we will start our panel discussion. And I'm going to ask Shady to take this from here and have his keynote address, giving and talking on sector-wise and the impact on the industry and then we will go on the discussion. Thank you, Shady, over to you.
Thank you, Aftab. What I'm going to actually go through is to give out a brief global outlook on the global economy as we see it. We're going to drill that down to the regional economies and then on to the UAE and to look at the impact on across all sectors. I'm going to try to keep that brief, but I think it's important to reflect on the global economy because we are just past the mid-year, and it's clear that the global economy has undergone one of the greatest shocks in its history as efforts to control the spread of the coronavirus pandemic led to unprecedented lockdowns and curbs on freedom of movement. Now, while the threat is by no means over, many countries continue to struggle with rising levels of infection, as we're seeing across the US and LATAM, and the risk of a second wave remains quite salient. Most major economies have begun easing restrictions to varying degrees, and this has enabled some semblance of return to normal economic activity. This has actually been reflected in many of the high-frequency data points that we've had over the month of June. In the US, for example, retail sales jumped 7.5% month-on-month in June. That followed an 18.2% gain in May. In Europe, one variable to look at is restaurant bookings. Restaurant bookings in Germany are now where they were this time last year. In the UK and the US, they've picked up from minus 100% year-on-year slump during the lockdowns to minus 32% and minus 62% over the last month. So you're seeing these semblances of recovery from these markets, but policymakers are actually looking at China to the upside surprise in growth that we've had in the economy over there. China came up with a surprise 3.2% year-on-year growth in the second quarter, and this is giving hope that this recovery will be replicated in the third quarter across most developed economies. China was the first economy to be hit by the pandemic, and the draconian response that they had actually helped bring it under control comparatively quickly, and this has enabled the resumption of most activity in Q2. However, an important point is that the underlying growth data was quite more troublesome. This is because it's been indicating that the recovery from the minus 6.8% contraction that you had in Q1 in China is being led by fiscal stimulus, i.e. government spending, and that the consumer in China was not doing quite well. And to look at the data, retail sales in China actually declined 3.9% Q-on-Q, while industrial production shored up the headline figures with a 4.4% increase. Now, the risk that a similar experience will be seen in major developed economies as they further ease their lockdowns is leaving aside the many surging cases that you're having in the US and the LATAM, and the risk of greater rollbacks on is easing. While many consumers have saved money through the lockdown period, there will be some measure of pent-up demand. So consumers that have been holding up spending over the period of the lockdown might be spending up again, and this has been possibly going to drive the month-on-month recovery that you're going to see across different sectors in the global economies and the regional economies, and it includes retail and leisure. However, the fact remains that many have to varying degrees lost, many people have lost their regular employment and are being supported right now by the government furlough schemes, which is basically the government's stepping in and paying employees' salaries, and cash handout schemes that have been carried out across the US and continental Europe. And these are running out. And if you look at the employment figures, they're reflecting a strong picture, they're reflecting a recovery picture. In the US, unemployment fell back to 11.1% in June from a peak of 14.7% in April. However, the core employment in the US is more troublesome. Core unemployment has risen up to minus 5.9% from 5% the previous month. And this is concerning from the standpoint of a durable recovery. And the supplemental $600 unemployment benefits that was approved by Congress 4 months ago set to expire at the end of July. And this will be impacting 25 million people. In the UK, while Chancellor Rishi Sunak did unveil a raft of new measures in July, he reiterated that the furlough scheme would come to close in October, declaring that to maintain it any longer would offer false hope that it will always be possible to return to people the jobs that they had before the crisis. So job losses in developed markets are being concentrated in the low-paid retail and leisure sectors in particular. And this is risking heightened inequality across the globe. And I think some of the participants will be talking about some of the risks that this will cause to different economies around the world out of this rising social inequality. And tensions between China and the US are another risk to manufacturing industries should a renewed trade war break out. In this environment, it is little surprise that the IMF downgraded its 2020 GDP forecast to minus 4.9%. This is 1.9 percentage points lower than they forecasted in April. France, Italy, and Spain are projected to see the biggest shocks at minus 12.5%, minus 12.8%, and minus 12.8% respectively. In the UK and the US will not fare much better, with contractions of minus 10.2% and minus 8% respectively. In fact, the UK government forecasters say that economic growth in the UK will be the weakest in almost 300 years. And Japan's economy will shrink by minus 5.8% according to the fund. So quite a gloomy outlook. And as the report notes, there remains an even greater measure of uncertainty than in a normal year, given the ongoing threat of the virus. While there have been positive reports regarding the development of the vaccine, as you pointed out to Aftab, the prospect of an effective treatment being developed and distributed globally in sufficient supply remains some way off. In the meantime, policymakers and on the fiscal and monetary fronts will have to do what they can do to support their economies through this time of the crisis. Drilling down at the region, we did issue our earlier forecast for the region at the beginning of the year, but at the half-year mark, we've had to revise down our growth forecast for most GCC countries. The downgrades take into account the newly available GDP and budget data that we had for some of the countries. We have the Purchasing Manager Index readings, which we follow quite closely, and the June PMI readings for the UAE and Saudi Arabia, and the latest oil production estimates from Bloomberg. The biggest revisions were for the smaller economies in the region, with the UAE growth forecast remaining roughly unchanged at minus 5.5% this year, and Saudi Arabia revised slightly lower to minus 4.2% on a nominal weighted GDP basis. We estimated a contraction of minus 4.7% in real GDP compared to minus 4% previously. Q1 GDP data showed the Saudi economy actually contracted minus 1.1% on the back of contraction in the oil sector. Now, this didn't take into account the impact of the coronavirus because lockdowns happened in Q2. So likely this worsened in Q2, with oil production in May and June sharply lower than Q1, as the OPEC Plus group agreed to deeper cuts in the face of the collapsing collapsing demand and decline in prices. The PMI data points to contraction in Q2, while household spending likely improved in June, as purchases were brought forward before the VAT rate came into effect in July. We expect that higher prices for goods and services to provide a headwind to recovery in the kingdom in the second half of the year. In the UAE too, oil production cuts would have weighed on the overall economic activity in Q2, while the June PMI showed the economy was stabilizing, with the first reading above the 50% mark in 6 months, and the 50% mark is a marker that indicates positivity on that front. This followed relatively 3 months of steep contractions in the output in the PMI reading. Private sector employment continued to decline in June, as it had since the start of the year. Job losses, together with cuts to salaries from March, likely weighed on domestic demand, even as there are tentative signs of improving external demand. On to the oil outlook, the upgrade to our oil forecast for this year, and we did revise it higher, had a modest positive impact on regional budgets, with the average nominal GDP, weighted by the nominal GDP. GCC fiscal forecasts are at minus 12.2%. Fiscal deficit forecasts are at minus 12.2% for the region as a whole, compared with minus 12.9% prior to us revising the oil prices higher. Kuwait is likely to have the biggest budget shortfall in the region this year at minus 22.5% of GDP, and this is reflecting the lack of diversification of budget revenues. Rating agencies such as S&P have revised their outlook on Kuwait's sovereign debt to negative in mid-July to take into account the depletion of the government reserve funds. On to the UAE, oil production has declined to 2.43 million barrels a day in June, down from minus 9.3% since the April peak of 3.68 million barrels as OPEC Plus group implemented deeper cuts to production from May in response to the collapse in oil demand and the sharp decline in prices in April. So you can see the relative sharp drop oil production this year compared to last year, and how much of that is driving the headline GDP lower. These additional cuts will continue potentially through July. Thereafter, UAE oil production will potentially start to recover, although output will remain well below the 3 million barrels a day, potentially extending into 2022 under the existing OPEC Plus framework that's in place. So we expect the oil sector this year alone in the UAE to contract by minus 7.5%, with a potentially smaller contraction in 2021 as the oil sector starts investing in hydrocarbon sector related investments. So that's in your oil production facilities and your oil processing facilities, as ADNOC and many of the other oil producers have announced they will do. The non-oil economy in the UAE appears to have stabilized. We've had PMI data suggesting that the non-oil sectors in the UAE stabilized in June, and this followed 5 months of deterioration in business conditions, particularly during the lockdown period of March to May. While business activity has picked up again following the relaxation of coronavirus restrictions, new work growth in the PMI readings was relatively muted. So new work activity that companies are getting, and this is suggesting that underlying demand conditions here remain relatively weak. Employment in the private sector continues to decline, however, as firms look to cut costs in the face of lower oil revenues, and this will definitely weigh on consumption and investment growth going forward. The CPI moved into deflation, further into deflation in May, declined minus 2.7% year on year. Housing costs, which is the biggest component of the inflation basket, continues to be a key driver of deflation. Food price inflation has accelerated, and this is expected as a result of limitations in the amount of food coming in and higher demand, and it went up 6.2% in May. So you see all these different readings really picking out some of the key elements of how the lockdown is affecting the economy. One key point to point out to again is public sector lending. Gross bank loans growth picked up in Q2, reaching 5.8% year-on-year in May compared to 4.5% in June. However, the fastest growth has been in lending to the public entities, and that is up 24.6% year-on-year in May. Private sector loans have actually declined slightly on an annual basis in both April and May, although this is largely due to deleveraging potentially by individuals. Private sector business growth averaged 1.3% in January to May compared to 5.4% the same period last year. So you're seeing this difficulty in private sector growth picking up in the UAE. Business conditions in Dubai have stabilized. The headline PMI for Dubai itself rising to 50, which is the marker indicating that we're just tipping into that positivity zone from 46. Business activity recovered as restrictions on movement and business operations were further eased. So you see that pent-up demand again filling into some of the data readings that we're getting. However, the employment index continues to fall and it fell to 45.7 in June from 46.8 in May. Then that's indicating that employers are starting to shed jobs. Again, if you look at the GDP data for Dubai's economy, GDP contracted by -3.5% year-on-year in Q1, compared with 2.2% the same period last year. The key sectors of wholesale, retail, transport, and storage all contracted in the first quarter, and the contraction potentially will get much worse in the second quarter as the economy was shut down for most of April and just partially reopened in May. We expect Q3 in Dubai to be a period of stabilization for the economy and a modest recovery in Q4 as the external demand improves. The government has announced a number of fiscal packages, the third of which was a 1.6 billion dirham fiscal package, stimulus package announced in July to support businesses in the Emirates. In terms of the real estate market, and that's my last point before I hand it out to Aftab again, both residential and commercial real estate prices in Dubai declined in Q2. This is at a slower annual rate according to data that we got from Astico. Villa prices declined -2.9% Q-on-Q and 10% year-on-year compared to an 11.3% year-on-year decline in Q1 2020. Apartment prices declined at 11.2% year-on-year. The per price square foot of office space saw decline. Transaction volumes likely slowed in the second quarter as movements on restrictions were imposed. Actually, 1,824 transactions were recorded in April, with the majority of these being off-plan sales. We see that the increase in supply of residential units while demand, we see an increase in the supply of residential units while demand is likely to remain muted, and this will continue to weigh on prices in the coming months. That's my roundup, Aftab. I'll just hand it back to you and we can take it on from the Q&A after that. And I think I'm 1 minute 51 seconds over time according to my timer, so I hope I did well.
Thank you, Mr. Shady. Mr. Aftab, if you can unmute.
Yeah. That's what I was going to say. Okay, keep yourself muted. But this was very good rundown of different segment of the economies. Plus, you have covered most of the sectors. Before I kick off this discussion, Shady, I believe there are issues which I should ask you and should start this, from you. You have given some of the implications across the different segment of the industry. And so I just wanted to ask, okay, as a research and development, your team, you always do that, your own research on different segment, country-wise, and different areas as well. So but I would like to ask, what longer-term trends might this outbreak serve, as you see that it will go, and then how is the future looks like for you, especially if we talk about 2020 and beyond?
Look, the longer trends that you're seeing right now are what you would call the new normal, and there is this shift to a new normal across a lot of different sectors. One of the sectors we're looking at is brick and mortar retail. And there's been a huge migration of a lot of these businesses, and this includes even your local supermarkets to online retail. Just one of the platform developers, which develops apps for online retailers in the UAE, onboarded close to 500 brick and mortars company onto their applications. So meaning these companies right now in the traditional retail sectors are moving online. And this will have significant implications both to the structure of these industries and to the employment viability in these sectors. I mean, if you look at Carrefour, I think Carrefour as a group said they will set up close to 50 so-called dark houses, which are these large facilities where you house goods across the region, not in the UAE, across the wider region where they operate, just to support their online retail arm, because online retail, even for supermarkets, is picking up significantly. So that sector, you're going to see significant migration into digital in that sector. And the interesting factor over there, Aftab, is that studies that have been undertaken by different companies to look at whether these trends are short-term or long-term indicate that most people are actually comfortable shopping more online and see the benefits and the attractions of doing that in terms of price comparison ability, in terms of comfort, and in terms of speed of delivery. So all of these factors are playing a very big role. In different sectors like the airline industry, you're also having very significant changes to the way the tourism industry is being run. And I think this is also some place where the insurance industry has the ability to provide new products and services, as we've seen with the Emirates announcement that they'll be providing free travel insurance for older travelers. So you have this new normal that you're living with the virus potentially now and into the immediate medium term. And there needs to be adjustment into how businesses operate. I mean, even in terms of returning back to business, a lot of businesses are seeing the viability of having people working from home. And we didn't have enough time yet, but potentially we're not going to see such a significant retraction in productivity of people, particularly, let's say, mothers who would rather work from home and be closer to their children. You're actually seeing in some instances spikes in productivity on that front. So definitely we're still through the period where we're assessing that, but there will be a significant impact across all key sectors in the economy.
Okay, very good. So coming to, I would like to ask this question with Walter, representing Zurich as an international company, not only in the region Middle East, but if he can give a holistic as well. Basically, my question to Walter will be, how is the insurance industry likely to shape up to the unfolding crisis before you go to your own domain? Of course, life or other sectors, but overall, that's my question to you, Walter.
Yes, so thank you, Aftab, and a good presentation by Shady, giving us an overview of what's going on in the world. At Zurich, we're a multi-line global insurer, and we've been working with the Global Economic Forum, with the World Economic Forum, on various reports to try and understand what's going on. So when we've asked 500 different CEOs from around the world, what are the seven most likely fallout risks of this situation? Number one is a prolonged recession of the global economy. Number two, a surge in bankruptcies affecting different industries. Number three, a failure of certain industries or sectors in certain countries to be able to adapt themselves fully to the changes. High levels of structural unemployment, tighter restrictions on cross-border movement of people and goods, weakening of fiscal positions in major economies, and protracted disruption of global supply chains. All of this is affecting the insurance industry, and it's affecting different sectors in different ways. So if we take, for example, motor insurance in the short term has actually, in terms of claims, benefited. There's less fleets going around, there's less people driving, there's less claims coming through. But what will happen to the longer term effects of that is we're yet to be seen as the market recovers. If we look at P&C, so Zurich as a whole is expecting the fallout of the COVID situation to affect our business to the tune of $750 million US. Most of that is business interruption and it's travel insurance. They're the big areas where we're seeing the biggest hit in the short term. But we're also suffering, my area, which is essentially life insurance, is suffering from low interest rates, market impacts. We're suffering, we do a lot of business, which is essentially pensions business around the world. So as corporate business contracts, we have that effect. So there's many things that we're seeing. But what we are also seeing is that companies need to adapt themselves. And this situation has been, for us at least, a catalyst to essentially to change our business. Technologies, and Shady said it earlier, what we're seeing is customers want more digitalization, more transparency, more clarity, more of an ability to be able to self-serve. In the retail space, that is definitely the trend that we're seeing, and we're investing heavily to try and do that. In the corporate space, the risks are more complicated, people that need to be involved, but we need to have better access to data, better information, so that we can actually price those risks and manage those risks effectively. So I think it's a period of change. Not all companies will survive. I think globally, companies will merge.
Walter, I just wanted, like, while you're giving a little rundown on different sectors. So what is the overall, this COVID-19 impact, if you take in consideration on the insurance industry within this region where we are sitting? Can you just specify as well for the interest of the audience, which are from the region as well?
So I can talk in this region, my business, which is the life insurance business. We're a market-leading life insurance business. We will see a dip in our business in 2020. As the economy and the markets are opening up, we expect a recovery in 2021, and then as we move into 2022 after, we expect a more normalization of the new normal. We're yet to see the full impacts that Shady was talking about in terms of the contractions and the effects that will have on unemployment and other areas in this region. So we need to have a look at that. Interestingly, on the P&C side, and on the some of our colleagues are seeing a hardening of the rates as well, as capacity in the market has reduced and pricing has been pushed up. So I think it's early days to see, but we do see a dip and then a gradual recovery as we go into 2022.
Okay, very good. I would like to go to Dr. Ali Zahra, being the CEO of a local insurance company and representing as well the industry as the chairman of Insurance Business Group. More specifically, if I ask you, Doctor, that how has this COVID-19 impacted the insurance industry in UAE, both from a P&L perspective as well as the balance sheet, if we talk about?
Well, thank you, Aftab. Well, I would like to refer to Shady. He is very much impressed us with a comparison of statistics and percentages, which we are not able really here to say about our industry, because it's more likely practical and operation and daily by daily, rather than having a statistical result until 12 months passed and we wait for insurance authority. Just thank you, Shady, about all that comparison. What Shady said, the pressure on economy is going to be really a high pressure on the insurance industry in the UAE. And what we have seen the two line of business I can mention, because there's too many things in this. I can mention two lines of business, motor and medical, which represent 70% of the market. If you look to the medical, the number of claims increased substantially related to COVID. But some other people said the other claims, which is outpatient, this and reduce. But in general, if we look to the figures, we have seen the claims in medical increased, while the claims in motor, as Walter said, it reduced substantially due to lockdown and other economy things. If you look at the claims side, you look at the premium. The price, it's a war. We can say we never seen a price reduction in motor like what we have seen these days, regardless of the insurance authority regulation and lower premium, etc. The things is going extremely bad and worse to worse. In a way, when you see the motor is a driver related to a public, you know, the individual, a personal line of business going to that level, and there is no control on the pricing, on the claims and other things, this is extremely showing that the difficulty of insurance industry facing from two major class of business represents 70%. And what is going to happen in addition to that, the investment which is normally related here in the local market, it's related to stock shares as well as real estate. Both of them, I believe, the stock shares is collapsed the way that what we have seen, and the real estate now waiting to the end of the year, the valuation. What you're going to have, your valuation is going to hit badly. Related to the balance sheet, I believe you cannot see that now unless you finish by December. We are seeing this going to be very, very bad situation and very gloomy. If you look at the people talking about the growth on this, there is no growth. Broker these days, their business is dropped, what they said, by 30%. Motor business is dropped by 30%. If you look to the medical, there is no growth. Many other people talking about need compulsory this and that, but it is not like what it was before. If you look at this situation, really the solvency margin of companies is going to hit badly. And what is going to be the result of those companies they have A-rated in the market? What AM Best is going to look at the situation as the result is worsening, going from worse to worse. What happened in this situation where we are in this, the receivable shoot up to sky. The delay of paying a premium is really, really bad. If you look at the consequences of what we have seen in very brief, premium is not growing, is going to be lower. If you look at the solvency is going to be bad, investment is going to be bad, more exclusion going to be added to the policies because of this situation and the COVID. Many other things will relate to litigation. I believe it's a big dispute is going to be between insurance companies involved by brokers as well as, you know, situation is not going to be healthy, unfortunately. And very clear, the balance sheet, as Aftab you asked, is going to be reflected very bad results. All what I say in this, it's not a good year for 2020. And I don't think the insurance industry is going to pick up even for next year. If it's next year, it's going to show in second half or last quarter. That's in very brief, unless you have another question, Aftab.
Yeah, no, that was good. Okay, my question now, I'm going to ask, because one of the very important segment of our industry is loss adjusting, which definitely Mr. Walid Jishi, one of the panelists here, he is the founding and managing director of Arab Loss Adjuster, which is a very prominent loss adjusting firm in the region. And I would like to ask Mr. Walid, from you, from your perspective as well, what you have been observing. Of course, we all have never witnessed such a pandemic in our lifetime. You are very young, even you have not seen yourself. I would like to ask how loss adjusting has been impacted by the pandemic and the way your company or yourself have tackled to expedite the claims assessment process, etc. Can you just give a light on that?
Well, let me just take it in a broader form. The impact on the insurance industry, as I can see it, or as we are experiencing it, is very significant. It has to be brought to the attention of all, whether insurers, brokers, reinsurers, which I am sure they are well aware of it. The main problem now we are facing is the impact on the human behavior. We always believe that the humans are the first link and last link when it comes to the risk handling and operations of perils. I'm not talking about UAE alone. I'm talking about the whole region. When skillful people or non-skillful leave their jobs, lose their salaries, their income, they miss the duty of care. They breach the duty of care. This is very principled. We are witnessing kinds of claims we never experienced before. Thefts, robberies, infidelity, even cyber, as you know, probably you are hacked and I am hacked and everybody is being hacked. This is one single important thing which insurers have to look at now. The second thing is the wording of the policies with regard to many kinds of insurance. Let's take one example, the engineering, CR insurance. The only policy I have seen that speaks about in case the project is stopped, force majeure is Zurich policy. No other policy speaks about it, which turns the policy automatically to a property policy, and we are witnessing many projects being now withheld, not continued. This is an opportunity. We are losing skillful people in the industry. The insurance industry have to address all these issues in a proactive manner, not self manner, we, instead of I. That's very important. I am concerned that we as adjusters are facing a problem with the wording of the policies. The business interruption has to be revisited. I cannot believe that a policy which says denial of access, then puts the definition and limits, and then adds another extension, loss of attraction. The loss of attraction kills the denial access meaning. So even these have to be revisited by insurers, reinsurers. We have to be more specific. It's not necessary that we copy and paste anymore. We are going to witness, as Dr. Abdul Zahra said, a significant drop in the insurance premiums. And small example, yesterday I was talking to a car rental company, number one, 920 cars are laid off. The hospitality, whether in UAE or Bahrain or Qatar or Jordan or Lebanon or Saudi, it's confronted with a very bad situation. That's why I say that the brokers, as Dr. Abdul Zahra said, we have 127 brokers. We have to bring in, or maybe the number is more, we have to bring in the state of knowledge required to be feature of a broker, good broker, to create innovation, to create awareness amongst people. As Churchill in the old days said, my will is to knock at the door of every British family and say insure. That's what we need in general as an industry. So these are my general comments. I want to see also that there is importance, there is attention to the small and medium enterprise insurances. The mega projects that will become rare. And that's where exactly we can make good investment, good income, invest the money and collection of premium to be on time instead of giving with the new introduction of the accounting system, the new accounting rules. We are going to face a lot of provisional reserves for bad debts. The unpaid premiums within 30 days, 60 days, or 90 days, and so on. Thank you.
Very good. So good to hear that. I would like to come to Mr. Farid Lutfi, whereas he represents the voice of the industry as Emirates Insurance Association Secretary General. Before I kick off with my other questions and we go on the regulatory framework, we go on other questions and all, I would like to touch base with you that what is the measures which has been undertaken as Emirates Insurance Association to support the industry, the insurance industry at large, because that was the cause of the Insurance Association. So here I'll take a pause and give it to you to answer, Mr. President.
Well, thank you, Aftab. Thank you, gentlemen. It's all inspiring, and you are leading the market. Obviously, we have good calibers here that we are on speakers. And of course, when I talk about the association, or the IA as well, that is all belongs to everybody. There's all your association as well. And of course, we deal with banks too as well, Shadi. You are involved in that too. Your firm is involved with that as well. With this, just to summarize, this year in March, the IA called on insurance entities along with technical committees of EIA to discuss stimulus packages through a webinar. The EIA Secretariat, while monitoring developments of COVID-19, has communicated with all its members about adopting measures during this pandemic to protect the health of their customers, employees, families, and the community at large. And obviously, this is under the auspices, of course, which we fall under the IA. The IA introduced packages for insurance entities to ensure their continuity to perform during the pandemic crisis. A few of the IA's actions, for example, just to take a few, like a reduction of almost 33% of value of guarantee required for insurance brokerage companies. Second thing is delay in the introduction of new life and family takaful insurance regulations, which we definitely Walter is involved in that. BOR 49, for example, which they have also have delayed till October, and we still at the IA are also discussing still with IA to even further delay this approach for now, because it involves a lot of people's life, as all of you mentioned, obviously, even during the banking, that these companies need, they firms like this with IFAs, there's some firms that they have over 300 people that work for them. So it is not easy. It's all families, they're all established, they are all involved in loans, they are all involved in properties. So they have to delay that as well, which they have done 6 months, but we are also asking for a little bit prolonged period as well until COVID-19 is over. The third thing, they have allowed IA allowed more time for insurance companies, brokers, TPAs in submitting annual and quarterly financial as well, the statements. Through a market-wide consultation adopted by its committees, IA members suggested numerous proposals to the IA for consideration to further support the industry in countering the repercussions of COVID-19. Some of these recommendations are such as, I just mentioned a few. A lot of people know and published over 28 points, but not everything is taken up, actually, and some of them are still ongoing. For example, a delay in implementing the IA board decision number 23 of 2019 for regulating insurance, for example. That is a point to be taken in consideration. We are still in touch with the IA, because a lot of companies, almost all companies, they reinsure, particularly the national one. The second thing, we asked for a freeze on Emiratization ratio for requirements for year 2020 for the time being, knowing what the market is going through, and like a lot of skillful people like Walid mentioned, getting out of the market. There has been redundancies, obviously, as well. The third thing, an exemption of certain fees such as supervision, licensing, and training to be delayed. Allowing also we have asked about from the EIA, of course, the committees, again, I mentioned EIA belongs to everybody in the industry, allowing insurers to conduct online systems and signing and sealing documents, thus doing away with papers, which they have welcomed that. And of course, UAE being a smart country, Dubai being a smart city, definitely allow that. And we are going towards, obviously, an IA and machine learning and all that stuff, and IoT, obviously. IA was receptive and agreed to communicate and coordinate with other government departments and authorities within the UAE, addressing proposals submitted by the EIA. These authorities being such as central bank for interest-free loans and stuff that could be done, which haven't come to fruition, I guess. And although I'm talking, maybe some companies have felt that because I'm not in the market itself, but I am on from the association side. Also, we have, of course, the talk with the health authorities to ease on penalties, provide us payment according to terms and conditions mutually signed with some of the, local authorities, such as DHA, for example, if I can mention that, rules and regulations different than, Article 38 of Dubai Department of Health of Abu Dhabi, sorry, Department of Health of Abu Dhabi as well, which we are still renegotiating on that as well. And another thing is, of course, they have also contacted the Federal Tax Authority to arrange for extension of deadlines of submission of VAT from March to May, and hopefully we will still trying to extend that even further a little bit if we can. Lastly, upon IA's request and of a number of proposals, the EIA submitted clarification. Of course, the IAA asked to clarify also any medical institution who have inflated medical expenses incurred in dealing with COVID-19 and pandemics. This is also obviously, it is a matter of fact, is a problem within the society. Just to give an example, and we're talking about SMEs and all that, how to help. A school administrator in the country who runs 3 schools, they're asking for health insurance. Schools are opening now. She have been to many companies, and they finally, I don't know how it landed on my table as well as look from the association, why nobody's insuring us. Everybody's refusing to insure the crew of the schools, for example. Of course, it is obviously, you know why, because students will go back and there will be COVID and stuff. If COVID is covered, they're worried about that. But we have to find out a solution to do that. Another second thing is the insurance position regarding losses related to COVID-19. And as Walid mentions, and Abdul Zahra mentioned, Dr. Abdul Zahra, what is happening with the PI nowadays. In the international market, we know even court cases going on in London, FCA and stuff dealing with it. In the States, they're dealing with it. We have also advised the IA that this is all, and we have given them also the reasons and why to the IA that we cannot do away without reinsurance, and of course the terms and conditions between retail and direct insurance companies are also related to reinsurance companies, as a matter of fact. Without them, and some people have even asked, and even people from IA say, well, but people are doing it. For example, in Germany, Munich is doing that. So yeah, they might do that for Germany, but they might not do in the Middle East or our region, for example. But of course, a lot of companies are getting that, depending on the relation as well with the reinsurance. And of course, why EIA requested a health insurance employees be included essential professionals during the lockdown. We have also included that. That was a good initiative on the insurance companies as well to take that measure as well to help the people on the front line, as we say. And of course, they deserve an applause, obviously, and we all know that. And some of our families work on that as well on the front line as well. Some of us do have, even the audience, I would say, that some of their families are working on the front line in terms of the health insurance as well during COVID-19. That's a simple thing to take now. Since I have the 5 minutes and stuff, we can go on more on that 28 points as well. Thank you.
Thank you very much, Mr. Farid. And then I would like to ask Shadi, as you see that during these crises, businesses, am I mute?
No, I hear you.
No. Oh, you can hear, yeah. So I thought I'm just mute. Okay, so during these crises, businesses are, as I said, also averse to face risks such as employee work-related injuries and all business interruption, disruption to supplies. You gave a rundown on the lack of access to credit individually, and and these risks affect the business investment and the plans and the preparation which they have done in past, and the respond to such setbacks which was never precedented or never thought of. And mainly if we talk about SMEs contribution, which is significant to employment and also towards the innovation, which if I take the reality that many of them either have collapsed or remain sluggish, which adversely is going to impact the sector's ability to fulfill its employment and growth potential. So my question to you, Shady, is that, as you do a little research from your side and contribute to the audience here, was the forecast which you feel like, if you have done from our industry, which is insurance industry at large, because there is already shortage of the technical and then skilled people from our industry. So how is this employment growth potential you feel that is going to address, after post-COVID?
Look, I mean, one of the key risks you have is outflow of talent from the UAE, which is always potentially something that might come into play. And what we have in terms of employment data, we get it through our PMIs, and the PMIs have been reflecting that employers across different sectors have been cutting jobs. And this tends to intensify during periods of stress. We see some actions during periods of stress don't tend to be the right term long ones, but definitely you are going to see that kind of an impact. And remember one thing about UAE, for a long time, our country has been trying to position itself as a hub for attracting talent into the country. And COVID is that headwind that hit us during that process and is causing a lot of different companies across a lot of different sectors, forcing them, in fact, to have to cut down jobs simply because the commercial viability of their business is not possible during these periods of stress with that elevated level of employment. I think some of the measures undertaken by the policymakers to try to, let's say, allow for visa exceptions for certain career professionals, for certain professions of a certain caliber, are a move in the right direction. But we do need that level of support still to kind of keep those employees in and give them the attractions needed to stay in this economy. That being said, Aftab, there is a flip side to that, and there are different sectors like digital that are seeing strong employment and are seeing people coming in and being employed into their different sectors. Some of the larger employers have actually said we're not going to cut down jobs, for example, in bricks and retail and in bricks and mortar retail facilities. We're going to move people to support our digital sales infrastructure facilities. And one of those I'm pointing to is one of the largest supermarket operators in the region, who has been building capacity to support digital. So there are businesses that are dealing with it, but I think the overall picture in the UAE, in the region, and the globe will be that employment will drop. And with employment dropping, this will have a domino effect across a lot of different sectors. And that includes consumption, that includes the real estate sector, that includes sectors like yours, insurance sector, and demand for that, demand for everything from motor insurance to health insurance post-COVID as the number of people actually drops.
Okay. Hello? Can you hear?
Yes.
Yes.
Okay.
Yes.
Very good. Okay. My question, that's a very good answer, but definitely we still, as we see that there are the gloomy days, still is there. The cloud is still there. We don't see the sunshine as, because we are living in a world where we can't say that UAE alone is the world for all of us. So we have to take in consideration that we are staying in a global village, whereas the impact comes from any sector to each and every sector is, aligned with each other. So coming to Walter, from your side, as you know, the large corporates and some of the SMEs normally have their own business continuity plans, and they may not fully address the fast-moving and unknown variables of an outbreak like this, which was not experienced, as we say before, on this large scale. And usually, even contingency plans, promote operational effectiveness following events like natural disaster, or we talk about cyber incident or financial crisis, or we talk about among other crises. So considering the widespread contagious this ailment and quarantine, work from home, or extended school closures, or whatever you were talking about, like irregular banking hours and all this, do you feel that this crisis has raised several unique challenges for our own industry which are being faced today. And what is, in your opinion, which you feel that it is the new normal, which everyone, we should take it and practice, which was not there earlier days?
I think this COVID-19 situation is unprecedented. Yes, we have had business continuity plans, but often, and I've worked for Zurich 25 years, we spend a lot of time worrying about things that never actually materialize. Now we've got a situation where we've got a global lockdown, where we've got people unable to get to work. We've got situations. So for us, it's been a major challenge. I'm pleased to say that, globally, out of the 55,000 people that work for Zurich, 90% of them have been able to work from home. Here in the UAE, we've got 300 of our colleagues that are all working from home, and we've got some services from India, and they were able to all work from home. I think the workplace has changed forever. The idea that large insurance companies will have lots of people coming to sit at the office every single day and 100% of people, I think that barrier has now been broken. And the expectations it's interesting to hear Shadi's point, because I absolutely agree with him. I think one of the key risks for us in this country particularly is the loss of talent and the loss of the people that we need and the country needs to take us through this situation. And I think what we have to do is become, as employers, more attractive, more understanding of what that means, and using the technology to make essentially the work environment more palatable for those people that can really help. Customers' expectations have changed as well, Aftab. So we've got situations where, the way you can see the online trading community, the way that people want to communicate, all of that has changed forever. And I think we need to adapt ourselves. As an industry, insurance has been slowing and adapting itself. I think this has given it some impetus to change and to do that, and then to make products and services that are more relevant for the customers will become more and more important. And this is a really key point. One size fits all will no longer be the norm. I think we need to use AI and technology and data to be able to have solutions and insurance policies that actually meet the needs. Cyber risks will increase. Fraud, as Walid said earlier, is a major issue. Late payment of premiums. So what can insurers do to say, okay, work with our customers to try and get them over this initial hump? I think but it's changed forever. The world, our view is that certain aspects of the world have changed. And actually, in many ways, this will be positive. It will be positive for the environment. It will be positive for those businesses that can adapt. And those ones that we can, we'll really be able to take advantage of this.
Okay. Very good. I'm coming to Dr. Ali, and the same question I will put or phrase in a different manner for Mr. Walid. But as we all know, there were two major events which was cancelled this year. One of the event which was Dubai Expo 2020, and the other one was Tokyo Olympics, which might have some effect on the reinsurers under event cancellation policy that may cover them. Even for epidemic or pandemic or whatever, we'll have to look into it. I haven't seen their policies, terms, conditions, but just as we say, the outbreak is causing widespread concern and increasing economic hardship for businesses, cancellations to the insurers, as insurers struggle to suspend policy cancellation, while offering rebates on personal lines, extending business interruption coverage on commercial lines, and expecting cost sharing sometime with the government, like what has happened on the health side and employee benefit side here in DHA, as vis-a-vis Abu Dhabi is different, where government, they are subsidizing, the government is participating. What is your observation, Dr. Ali, that, have we done enough, or that very little attention has been paid to this particular area to retort to this crisis?
Well, Aftab, I would like just to have two words, what Mr. Walter said about things. This is COVID really changed the world, changed everything's behavior, as well as I agree for all the point is mentioned. working from home, this and that and this. I have one point important with our retail business, as we are insurance companies. The marketing side is not always portal and online and digital and this. This is very much limited to certain line of business. But there is another business that you have to see people face to face. And you have receivable. There is no way you're going online, ask people to pay you, and they will pay you. I still believe one thing, the body language in insurance will remain whatever COVID is there or not there or this. Body language in our business is remain and very much important. Going back to your point on this, on sometimes people, they say we stopped for 3 weeks, we need refund of premium, that and that. Okay, I can accept you stopped 3 weeks, you're not moving your car, but you're going to move your car in May, June, July, and you have a total loss. Your premium, you paid only 4,000 dirham, you want me to retain 500, but then I expect 100,000 dirham a claim. And this is not really the way, because you stopped the 3 weeks, you need a refund. What we found a solution for this, if at the end of the year, really, your loss ratio is good, there is no claim in this, I may share with you a refund or a discount, or you can say it for big business, it's a profit commission or whatever. Another thing, what you mentioned about Olympic and this is always event, what they call it, contingencies, policies. It is there over the world. I believe the losses is going to be huge. The international market reinsurance, they will see a huge claims in a way. Those events is not happening, it's postponed. It's the related business to this. You talk about Japan Olympic or another events happening in this. You know, the football clubs, they stopped. The other football over the world, the American or whatever in this. If you look at that, I think no one can now judge about the figures, what is the figures is going to be. The coming months and next year, maybe, you will see a lot of claims arise out of these, what we are talking about of today. But until now, as I mentioned earlier, the litigation is going to happen and the cases with the court is going to be huge. And I don't think the experience with the courts over the world, they have such kind of claims in the history. And their experience is going to be very challenging how to sort out these kind of claims. And this is what maybe in very brief I can say about this.
Okay, so the extension to this question was like, what will be the impact if you see on insurance premium? Would it increase or decrease in long term? What it is, you think?
Well, it is affected our premium mainly, and say in motor, because insurance authority, what they said, you have to give 50% a discount for those people upfront. You say those people is limited, and you have to give a discount below the lower limit of the premium that insurance authority reach around 30%. By the way, if we follow the insurance authority, is thanks God, this is really still good. Companies, they went even below and below, and the market today, I never seen in my 23 years in Dubai a rate of 1.25 of comprehensive and 1.5, 1.3. Is this really true what we are, the market, what they are doing? People, they fight for the top line because they have a market share. They have to fight in order to just book a premium. They don't feel about what is the result of this. It is the worst challenge ever we have seen in the market these days, unfortunately, due to this untechnical and professional competition.
Okay. Mr. Walid, I would like to ask, and also Fareed, these two questions will go both of them. That's what I said. I'm going to phrase a little. Now, coming on the insurance authority as a regulator, as we all know, any regulator has an enormous task and responsibility to make sure that industry should have adequate liquidity and appropriate measure to survive while combating this major global economic or this pandemic, which is on the way to fiscal depression. This can happen, primarily by providing immediate financial relief. We discussed earlier in the form of a fiscal stimulus with the help of government funding dedicated to our insurance industry, and which will aid to economic recovery, and secondly, mobilizing private capital to finance domestic development once the pandemic is over, as it will perform a vital role in intensifying the capital market. Okay. So what you see that the key KPIs which normally as a regulator they should pitch in during this particular difficult time to drive the innovative, the means and ways to enable the industry to reach their customers and strengthen the resilience to hold on during these turbulent times. This is the question from both of you. I would like first Walid, if he can give a little bit, then I'll go to Fareed.
Well, sorry, Aftab, do you allow the audience to ask a question? You don't have time.
No, I'm reading the questions while these are all coming also from the audience.
Okay, thank you.
These are questions which are coming. That's why that's the role of the moderator.
That's good. That's good. Thank you.
In principle, I always advocate the importance of the insurance authority, whether UAE or others, guidelines to the insurance industry. We have a problem. I look at SAMA, the most efficient guidelines and directions ongoingly are coming from SAMA in Saudi Arabia. We cannot continue, and Fareed will take this as a note from me, criticism not to Fareed, of course. We cannot continue working with a number, for instance, in UAE, 61 insurance companies and 100, I don't know, brokers, without having guidelines for fair claims handling, for fair underwriting, for certain directions regarding the reinsurance and placements. There must be guidelines. If the industry cannot put the guidelines, then it has to be imposed by the insurance authority. This is one factor. The second factor, we have to start thinking, when I speak about small and medium business, we have as insurance industry to be able to write policies on first loss basis and then share it with other companies in the local market instead of going to disturb the reinsurers with a 9% and 10% portion, which when there is a claim, the share of the reinsurance might be $10,000, $5,000, and so on. Then go to protect ourselves with excess of loss. As an ex-underwriter, I think like that. This has to come from the insurance authority, these directions. We cannot continue working on claims cooperation clause with reinsurers, and even small claims we face ourselves as adjusters to collect our fee, or we are waiting the cash call from the reinsurers, or so on, or the client. You will be paid if you negotiate settlement for a certain amount, and when I'll be paid within a week or two, and it goes 6 months. The insurance authority must play a significant role in this, not just to give general guidelines. The brokers must be given guidelines for good practices. With my respect, I respect all the brokers, but we see that there is no good practices in the market. And this needs the attention of the insurance authority and the insurance association in a proactive, meaningful manner. This is my general comments.
Well, if I might add, Walid, exactly, you are correct. I mean, especially with the number of brokers, like Dr. Abdul said, number of companies in this country. And of course, if you look at the statistics, usually you can see 8 companies out of the 61, 62, they have over 50, 60% of the premium. So looking at the regulations, that's the only way to do it. And I agree with you. SAMA is doing it on daily basis, even naming, I mean, they're not shaming, but they are naming at least, which I have asked you, you name the companies. And of course, with the new regulations that came in, that they put the actuaries, they put the, reprimanding external auditors, particularly the actuaries. So what are they doing? What are they giving? Because the company solvency, and if you look at end of this year, I was noticing a lot of companies, they said, okay, you should hold the dividends, for example, for your year and build up the funds because this is during COVID. And still, a lot of companies are paying dividends, which again, this falls into the regulations of the authorities, basically, who promulgate the law. We as an association can advise these things. I mean, when I say we, means all of you, you are all members of the association. You are the one who advise us to do it. And you have the committees and the higher committees and the board, obviously. But I agree with you, there should be conditions laid down from all aspects. I mean, I understand exactly where you're coming from, Walid, as well, and the gentleman and the audience, of course. I have worked in Turkey for a while when I was in Dubai Holding. We created a company from scratch and everything, and I was very much involved with their association. I was so surprised with their association. They are the one who dictating things to the treasury in Turkey. And they are the one who makes the rules and regulation. Be it tough, that's why the people talk that market is tough. It's not even coming from the regulators, actually coming from the association. And I was so, so surprised to see that they have a long arm. And of course, as Abdul Zahra always knows and says that in our association, we don't have that. And unfortunately, and associations usually, whether it is a British Association, FCA, they work together. We're supposed to work together for the benefit of the market and for everybody. That's on one hand. On the other hand, I always say that, and I again say it in public, because as we are 7 Emirates, and each Emirate has its own local authority as well. Well, good. We have to have a federal one. That's one thing also from regulation point of view, Walid. I think, I mean, it's good to have an umbrella federal, and then you have, also discuss with the local authorities. This is what people get confused. I mean, that's why I mentioned earlier, talking to IA, that they talking, Department of Health comes up with something in Abu Dhabi, Dubai comes up with something else, and it doesn't tally. It depends on where you are. Okay, some people say, okay, Abu Dhabi companies are very happy because the regulations there, but they're all working in the same country and they all have branches everywhere. Thank you.
Aftab, no voice. Aftab, no voice. Aftab, we don't hear you.
Okay. Now coming to, I said I will take Dr. Ali's point, and as he rightly mentioned, that insurance is something which is, as a practitioner of insurance, also I know that it is a consulting business. It is a business whereas, you can't do everything on distance, sometimes. But unfortunately, we have, and everyone have adapted to the new normal, and that has brought a digital impact on our industry at large. My question with Walter was that being able to offer the flexibility of, for the staff members working from home, and those attraction to the employee is over, because now we have to work in close supervision as well, because employees, they need supervision. Although we create a new trust between employer and employee during this particular point of time, so how you think, our sector also during this particular point of time, this was important that we should be ready with ourselves to embrace such crisis if in future.
Okay, just to clarify one point, and I don't disagree with the doctor in terms of insurance being a people business. I think what I'm trying to say is, for certain sectors, online capability will work very well. I think what we as insurance have to do is provide technology so our distribution partners, whether it's a brokers or cedants or whoever it is, can get access through the use of technology or platforms that we provide to make their job easier, quicker, faster, more effective, and be able to bespoke solutions to do that. That's what I'm trying to get at in terms of increasing efficiency by the use of technology to try and get to the market. That doesn't mean that we will ever get rid of the people. I think good quality, qualified people will always be needed to make those interactions and then those decisions. But what we can do is make their job easier, better, and be able to provide better cover for the risk required through the use of AI and technology and data. So I think that's point number one. I think what insurance, as an insurance company, I can only speak as an insurance company, we have to become more efficient. We have to become more, essentially, the processes globally on insurance companies are very labor intensive, very paper based, very, and you know, many of the global insurers have large legacy systems that have been built over many years. Still, you know, in the 70s or 80s, the big computers were put in place, and you kind of go, well, that we can't operate like that going forward. We need to adapt ourselves. So I see a situation where, you know, adapting ourselves and adapting our businesses to make sure that we serve the customers, because this is what we're all here to do, to make sure that customers get the right policies, get the right cover, and are protected at the times of need. That's what it is we're trying to do. So I think the working from home thing is only one example of how you adapt your business. But I think what we want is a more efficient business, so our costs can be lower. We can pass some of those benefits back to the shareholders, but also some of those benefits back to the customers as well. And then you can become competitive, and you can maintain our market leading position. And I think that's what's going to happen. I think as you know, and many of the panel have mentioned, you know, there's a lot of brokers in this market, a lot of insurance companies in this market, and some of them will not be able to survive or adapt enough. They will have to merge or whatever, right? And I think that's the reality.
Okay, very good. Thank you, Walter. With the restraint of time, I have to, you know, bring closure to this, would say, the webinar. The last questions, and I want everyone just only 1 minute. I will raise my finger, and you have to stop there. Which, for me, as I see that, how can insurers show the value they add by keeping the customer at the heart of their business model, whatever it is today. And which is very important, irrespective of whether you are the CEO of the company, you are a broker, you are a loss adjuster, you are an international company in life or medical or whatever. So only one, you know, I will put it like, how will we measure success ourselves? By keeping or adding value to the customer at the heart of their business model. 1 minute. So to start with, Doctor, if you wanted, because you have to run as well for another meeting.
Well, our business, it's a product of invisible. There is no product to sell unless nobody's seeing what it is. It's paper, service in this. I believe you have to focus on your service and service and service to the end of the world. Because other than this, insurance company cannot really have a good name, a good reputation, and a good, at least, result out of this. This is the only thing I believe in, wherever you're going, direct or online or whatever.
Okay. Walter?
Yeah, look, I think we have to continue to focus on our customers, right? And whatever it is that we do, I think going forward, if you concentrate on that and give the customers what they want, you know, and the doctor is absolutely right. You know, we sell an intangible. We sell the promise that when something goes wrong, we're going to have the financial backing and the ability to be able to pay and make sure and do good at that moment. And that's what we need to trust in our business, clarity, transparency, and give customers what they want.
Very good. The Walid.
The insurance contract is a unilateral contract. Honor the contract. And insurance is claims. When there is a claim, ask yourself why I don't have to pay. And don't say why I have to pay. That's it.
Okay, very good. Farid, you want to add here? Farid, can you listen? Hear me? Farid, can you hear?
Yes, I can hear you. No, I was mute.
Okay, 1 minute. Just to conclude, 1 minute. We don't have much time left. It's already 12:30. So let's conclude that. 1 minute. What do you want to say?
I just want to give an example. I got a call from a client, and I have, you're talking about the service, name of a company. I argued with the company, defending the client. What happened at midnight? A client went and had an operation, but didn't have time. They refused the claim because he said he did not take approval for the operation. Do you know what the operation was? And I'm not even a doctor. The guy had an appendix. If he waited for the approval 8 hours later, it would blow up and he will die. So when an insurance company realizes that, I believe that this is a good company to serve. Not tell me, no, you have not told me. It's a midnight and it's appendix. Anybody?
Yes, but Farid, this is emergency. No need for approval at all. No need for a company to wait and get their reply at all. No.
Thank you very much, because this is the case in point. It's an emergency, yes, but it's still the guy refuses.
It is sad story.
Yeah. Shadi, can you conclude, you heard everyone, gentlemen, you are not from our industry, but it was good of hearing your voice as well and whatever research you have done. So can you summarize in 1 minute as well to conclude?
Mute.
Shadi.
Sorry, I had to do that mistake as a last mistake. So I think the shift that I hear across all the panelists over here is this theme of the industry being is a theme of humility actually across the industry, right? So this will differentiate in the long run winners from losers, and I think clients will look back, particularly during these periods of stress, and remember which are the companies that have been with us, that have supported us during these periods, and which are the ones that have been particularly cruel to us. So I think it's important. It's very important to keep the customer in mind and keep that factor of humility and support during these periods of stress.
Very good. So, gentlemen, this was a very good discussion. Whereas we reached to one consensus. I can see that everybody is talking about focus on customer support. This is a time to prove the value of the relationship with policyholders, outside even sometimes policy terms, conditions, and emphasize on a consultative approach to address broader issues, which are, as Doctor said, which are critical to support client need as well. And the policyholder also should understand, like as he gave the rundown about the motor business, if someone asks, okay, my car was for 3 months, staying there, and they accept that there should be a rebate given to him. So these are the things. So, well, to conclude, we know that these are extremely challenging times for all of us, and the insurance industry, as other sectors, also need to get on the transformation of our business to become more agile, responsive, and connected organization with all the other verticals. And perhaps one remnant of the coronavirus calamity, which I see, could be that it propels more insurers to adapt and embrace the new normal to survive. With this, gentlemen, I would like to thank all of you for participating in this webinar, which was very important. And I must say to the audience, to get the most of our people, during this crisis as well, we must take care of all of our people, secure their health, build a mindset to handle fear, deploy with accountability, and reflect your changes of the new business model. And as we say, control the controllable, and avoid overestimating also, and calibrate our internal resources and adjust operation to new business model to secure business continuity. Thank you all, and this is the end. I can hand over to Sandhya.
Well, thank you, gentlemen, for your contribution.
Thank you.
Thank you,
Mr. Aftab. Thank you to all the speakers for giving us their valuable time and knowledge. And we also thank all the delegates who made it today to attend the discussion. And I'd also like to thank all my colleagues at Niche Publishers who made this possible. We have a survey for the delegates that we would like for you to fill as soon as the webinar ends. Until next time, stay safe and have a great week ahead.
Thank you.
Thank you.